We're going to give everyone a couple of more minutes to hop in, and then we'll go ahead and get started. So let's wait like another 2 minutes or so. Good week, good stuff. Can anyone hop onto YouTube for me real quick and let me know if the sound is working? Any specific questions that you guys have and want me to cover in today's simulation session? So we're going to cover risk management. We're going to cover entries. We're going to cover the multiple time frame confluence. Anything like structure or any other technical analysis topics that you guys want me to cover today?
I just got the how do you say, the notification from YouTube, and yes, it's working fine.
All right, perfect.
Can you hear?
Yep. Perfect. All right, cool. Then let's go ahead and get started. All right, so like I said, we're gonna go over entries. We're gonna go over risk management. We're gonna go over multiple time frame confluence. If there's anything else that you guys want me to specifically go over, then we can talk about that too. I saw like in the Discord ideas about retracements. So specifically, what about that do you guys want to know? Let me know that too. Like how to trade the retracements, how to find out when the retracement is happening. What exactly do you mean by that? And we can go ahead and cover it. So as always, let's go ahead and start off with the weekly time frame here. So what's the structure like here? What do you guys see? Feel free to annotate. So we know that we've...
Bullish?
Yeah, bullish, right? So price has been holding on to like some support areas here. We try to break below one time, push right back up, and then continued pushing bullish, yeah. So is this an extended bullish move, or do we see retracements here? What kind of a bullish move are we looking at?
Extensive.
All right, extensive move, and then price came up and held onto a resistance area here, right? And so now looking at, what has been going on so far, what are the levels that you guys would mark off right now? So what needs to be broken or retested right now for price to be headed, let's say, continuing bullish or coming back bearish? What needs to happen? Yep, so what I would do is actually mark off this resistance level right here. And then, is that a bottom wick that you guys are marking off here?
Yes, I did.
Okay. So these are the first two areas. If these are broken, then yeah, we can continue down here. But when I ask you guys what's the level that needs to be broken right now, that's this current level, right? Without breaking this, you cannot head up there, right? And without breaking this, you cannot head back down there. So these are the two levels that we're looking at least for this week. And then we can start looking into these zones up top here. Make sense?
Yes.
Yes.
So if this candle flips, then we're going to have the weekly candle in our direction. We have about 60 pips all the way up to like 73 pips. If we want to look for a wick fill, then around 134 pips. If price continues back down and it's bearish at the moment, if price continues pushing down and we get confirmation on some of the lower time frames, we start off with 44 pips and then we drop down to about 72 pips, and then we can potentially come back down for a wick fill for around 252 pips. Make sense?
Yes.
Perfect. Now let's go on to the daily time frame. So what do we see on the daily time frame here? What's going on? So let's break it down piece by piece. You had all this resistance area, right? So what's happening specifically in this area here? What is all of this?
Consolidation.
Okay, perfect. So we break above the consolidation, right? We come back and retest it with this candle, continue pushing up, create new highs, we push back into this area here again, and then finally we see some volume to continue pushing up, right? See a minor retracement, see another push up, you see another minor retracement, and then we continue pushing up bullish. We get one little break and retest candle right there, but we get a much better retracement right here, right? And then price starts pushing up here again. What happened at this level?
Price rejected.
Price rejected, and pretty much what happened with these candles. So we start to see signs of exhaustion before it even happens, right? Let me remove all these arrows here for you guys real quick. So if we're looking at this, we start to see signs of exhaustion here, right? Saw another sign of exhaustion here, right? And then price try to continue bullish, failed to do that, and then retrace right back down into these levels. So pretty much you saw a lot of bullish momentum from ever since price broke out of this consolidation, came back down twice to tap into the same exact area, and then you saw some nice bullish momentum to the upside, right? We started to see some signs of exhaustion here with these two candles, and as price was kind of just consolidating here, not really breaking the highs and lows, right? We tried to break above these areas, failed to do that, came back down, and for the most part we just closed in this area here. This was the first candle that came down and broke the lows, and then we started this entire bearish movement to come back down into these lows, pretty much in this entire range. That's where that retracement happened. Now we're pushing back up, and we just tapped into this area here again. So what needs to happen right now in order for you to look for any buy opportunities? What level needs to be broken? Exactly. So price needs to continue pushing up bullish. So that doesn't mean that, you can't catch this quick scalp. You absolutely can. You can catch a quick scalp here. But if you want to see a longer run of buy opportunities, you need price to break above this area, give you some sort of a retest here, which could happen on a 4-hour time frame, daily time frame, anything like that. And then you can see a continued bullish move up. And that's how you would turn this potential scalp into a swing trade. Make sense?
Yes.
But
how many pips were this? I can't remember if you mentioned.
Yeah, I did. Give me 1 second. It's 54 pips. At the top of the range, you have 75. Come up to fill the wick around 134.
Cool.
So all of that was for your buys. Now let's say you were looking for some potential sell opportunities. What would you be looking at? So I'm going to mark off the key zones for you guys here again. What do we need to see happening here? Yes, so that sell-off happening, right? So price tapped into this area. We saw all that, liquidity and all of that consolidation. We rejected into those levels, came back down, and we saw an entire sell-off. As soon as price tapped into these areas here, we saw a nice bullish push up right back into that zone, right? No retest or anything like that. These last two daily candles have been extremely bullish. This last one closed bearish after tapping into this area. So if we're going to look for any continued sell opportunities, we need to see this daily low here being broken and then come back up, give us some sort of a retest. That could happen on the 4-hour or the daily time frame here again. And then we can look for a continued sell. At least coming back down into this. Make sense?
Yes.
Perfect. Any questions so far? Cool.
No.
Now we are going to come to the 4-hour time frame here. So what's going on here on the 4-hour time frame?
Price is still rejecting that level.
So you had this entire zone where now clearly on the 4-hour time frame, again, we see consolidation here, right? And then we saw price retrace right back down into these areas, hold on to a support, consolidated for this little short period of time, and then we saw a nice bullish rally up, came back down, created a support here. So now if you wanted to look for a quick scalp opportunity, let's say in this range, how would you do it? In this 45 pip range, how would you do it?
Probably with one of those wick to the upside and continuation candles.
Yeah. So that could happen, or you could look for a potential break and retest, right? That's valid as well. But what if, let's say, price comes back down, taps into this area? Is that going to be a sell confirmation, or do you still need to see candles breaking below that?
It would have to break below that.
Right. So as price is breaking above this, creates a high, comes back down, holds on to a support. You see that liquidity grab wick right there. Price pushes up, creates a new high. So now the reason why we want to make sure that price breaks below that is because you could end up in a similar situation as what we just saw on the daily time frame, on the price action somewhere down here, where price could simply just tap into the same exact support area and then you could see a massive bullish push up. So that's why you need to see a break below this and a close below it. So then you can look for a retest candle and then a continuation back down. After that point, after this area here is cleared out, there's really nothing stopping us from continuing to push down. We can use some of this previous price action here to kind of figure out where is our partial going to be. So you can take some partials here, and as price continues pushing down, you can tap into this area here again as your full TP. And then for buys, same thing. You're going to wait for some sort of support to be formed, either here or wherever price is at the moment. And then as it starts to push up and you get the confirmation from higher time frames, that's when you would look for those buy opportunities. Any questions?
How many pips is this small range and this small range?
So that range, this would essentially be your no trade area, right? Because you don't know where price is headed. That's 37 pips. When price breaks below this and continues pushing down, that's 30 pips. Once price clears out of that, then let's say like coming into this area here somewhere, you have 73 pips. Even the bottom of that range is 114. And then once you finally head back down, you're sitting around 220 pips.
Okay.
Any questions before I go ahead and hit play here? Alright.
Nope.
So switch that to risk percentage. We have a $1,000 account that we're going to be playing with today. So what I want to see is, can price hold on to this specific support zone? So this is something I would mark off here on the 4-hour time frame. There. And the reason why is again how price has reacted here. And then holding on to all of this as support. Pretty much came pretty close to this zone here as well and then rejected. So is it going to hold on to support, and can we see a potential move like this? Or are we going to reject that and then continue pushing down, and then we can look for sells coming down here? So the only way that I would be comfortable taking a trade here is after a candle closes either in either of the directions. And then we can look at what are the types of setups that we want to be looking at to trade.
If the candle closes bearish, just slightly above this level, that would still be enough, right?
Let's see. You're saying if the candle, let's say, continues pushing down and closes right here?
A little
right
lower.
here?
Yeah, something like that.
So in a
out of that
situation,
range.
yeah, so in a situation like that, what you want to see is either the following candle give you some form of break and retest, or the following candle makes a top wick, rejects into that zone, and then as it continues pushing down and breaking the previous low, that's where you can take an impulse trade for 30 pips or so, coming down here. And then once that candle continues pushing, let's say below these areas or anywhere here, it's really not that far off, but anywhere here you take, let's say, a partial, and then you get another break and retest and price continues pushing, then somewhere here is where you would place your final TP. This area here is a no trade zone.
Right.
Why is this a no trade zone?
Because price would reject and like come out of that level multiple times. It's almost like a, I wouldn't say consolidation, but like a liquidity growth.
Well, there is consolidation here, right? Where's the consolidation? Yes. So this is consolidation. This was your quick fake out, and then after that we had all this bullish momentum coming back into this zone. When we try to push below that, we come right back here, respect this area, and then we see another sell-off. We try to break above it, we come back down, hold on to this area support, and then we see a lot of bullish volume in these two candles, right? You come up, reject this area, and now we're back in it. So yeah, that's how you would kind of, when price retraces back into the same area multiple times, and you see like wick outs, or you see fake outs, or you see consolidation, you see retracement, and every time price holds on to that area as support or resistance, and then there's a ton of volume that follows, that's generally what is considered a liquidity zone. Price comes back, taps into the area, and then you see a ton of volume that follows.
Makes sense.
So it seems like we're holding on to some support here at the moment. So we're going to practice here on the 4-hour daily and the weekly time frames, because we have done multiple simulation sessions on the 30-minute, 15-minute, hourly time frames. So I want to show you guys how you would apply the same exact thing on the higher time frames. I think a lot of people tend to have trouble with that, especially if you're only used to scalping on lower time frames. I kind of want to show you how you would apply the same exact thing regardless of, you know, whether it's gold, GJ, or like different time frames, higher time frames, lower time frames. It's the same concept.
Awesome, thank you.
Yeah, for sure. So this is Asian right now. We're clearly breaking the highs, but this was a gap down that happened here. This is where the candle closed. The following one started opening here, so I want to wait until this candle closes instead of trying to look for an entry here on this candle. Are you guys okay with me skipping onto the next 4-hour candle to see where we're headed?
Fine with me.
Cool. So we end up closing bullish. We're breaking the high. You can look for a quick entry here, or if you want to look for, let's say, a swing trade opportunity, then you wait for price to break above that. So let's say if you want to take an entry somewhere here, slow that down, visual mode. So let's say you want to take an entry as soon as price broke the high. Let's say you're going for a quick scalp opportunity here, right? So for about 44 pips, your stop loss, you could keep it a little bit wide, so it's almost at 1-to-1, or you keep it right below here. So what I'm really looking at is the bottom wicks of these candles here. I'm also giving this price to kind of fluctuate in its own little range, but it should not be breaking anywhere below that if it is to continue pushing bullish. I'm also looking to the left and taking a look at what's going on over there. So at this level, what I see is price rejecting into this exact area, right, multiple times, and then Also, you get like a quick little fake out. So that's what kind of gives me the confidence of, well, if we break below it, then where has price historically gone? Once we have broken below this area, we have seen wick rejections right into this area. Once we broke below this, the following candle again made a bottom wick rejection. Once we closed below this, where did we head back down? Right into this area, even lower here with this bottom wick rejection. Same thing here. So if we break below this, then where are we headed next? Right back down here. So that's why I would prefer to keep my stop loss right there. If you want to do that 1-to-1, you can keep it a little bit lower. But if you are to continue pushing bullish, you should really not be breaking below this, right? And then if you want to take like a quick scalp, you can place your TP right into this level. Does this make sense for everyone? Any questions?
Would you consider the daily time frame if it's bullish?
Yeah. So on the daily time frame, this is the level that we marked off the weekly and the daily, right? So if you want to check that out, you can as well. So let's go on to the daily time frame. So daily time frame is bullish.
Awesome.
Any other questions?
Yeah, so it doesn't really bother you that it's not closing above that level, like right there. Sometimes I get confused with that, like when it does or doesn't close above a certain level, especially when I'm trying to take a trade kind of like this with the wick to the downside and continuation type trades. You know what I mean?
Yeah. So pretty much the same thing that I told you the last 2 times, where you have the zone, right? So you could create a level like this, or you could create a zone like this, right here, right? It's the same thing, right? Where this is all this resistance, all that same thing, resistance, resistance. So as long as this candle is holding on to or creating some sort of support, where this candle did, right? It pushed up bullish, closed bullish, broke the previous highs, and then this new one made that bottom wick rejection, and then it broke the previous high of this 4-hour candle, and it's continuing bullish with a lot of volume. So it's showing us the volume, right? So that's kind of what gives me the confirmation. And then when you hop up on the daily time frame is also very bullish.
Right. Do you think perhaps those levels have more significance? For instance, like the bank levels in gold, the every $5 type bank levels, or still kind of the same thing? Like they shouldn't be taken so literal.
I don't
and
think
just
this should
considered
be
as a zone.
I don't think that they should be taken as literal. This is GJ. We're not trading gold though, right?
Yeah.
Any level in general, when a lot of people say it's an institutional level or like, whatever they call it, you shouldn't really take that as literal. The price action is there, the candles are there. Just look at that and pay attention to what level does price keep coming back to. And if that level, or if price, across time frames keep coming back to the same exact level, same tapping into the same exact level with wick rejections, consolidations, fake outs. My favorite one that the candle that I like to see for, like, let's say buys, for example, is like a massive bottom wick rejection, and then the candle closes something like this, right? Or a massive bottom wick rejection and the candle closes, but it also has like a little bit of a top wick. But I like to trade like a setup like that. So if that happens, and somewhere here where price is consolidating, giving me fake outs, holding on to that area of support, or it just keeps revisiting it, that's what I mostly pay attention to. I don't think those institutional levels, bank levels, every $5, something like that should be taken very literally, because as you go across time frames, you will see how the price action doesn't really hold on to that. You'll see it on like a 4-hour daily, but once you start getting down to, like, let's say the 1 hour, it doesn't really hold on to that. Or it could be the opposite. Maybe you'll see it on the 1 hour time frame, 30-minute time frames, but once you start going up to the 4-hour and daily, those levels probably won't hold on to it.
Okay, cool. And those candles that you drew, those would be your confirmation candles to enter?
Yeah.
Okay. Cool.
Alright, so let's play it. So 1% risk here on this candle again. or on this account again. And this is, yeah, like around 44 pips. We could also check the weekly. The weekly is also bullish. So this level that we marked off here, that 151, 313 area, that is off the weekly time frame, which is also held on the daily, as this new daily candle is breaking the highs, which is also being held on the 4-hour, as the 4-hour creates a support down here, makes a bottom wick, and starts pushing up bullish. If you wanted to take partials, you can also map out, let's say for example, if you wanted to take partials like every 10 pips or 15 pips, whatever your choice is really. What I would look at is, again, support area, so around like 13, 14 pips. This could be an area where you can take partials, so let's say you mark off this right here. This is where somewhere you can take partials as price is tapping into that, and then let everything else kind of just run. That could be one way, or you just let this entire thing run.
In the case where, like, say this candle were to break its own low, would you close some partials, or would you kind of just hold off since you were putting the stop loss due to the, like, because of the candle before? Sorry, my pen ran out of battery. I can't draw anymore.
No worries. I would just kind of let it run. If in this case, usually what I do, like when I'm using lower time frames, the hourly 30-minute time frames, as those levels start to make more support levels, I would take partials. And then if you know how this candle's kind of just fluctuating at the moment, I would reduce my stop loss. So I see when I'm like analyzing this candle, I see that price isn't necessarily breaking its own low. So maybe I can reduce my stop loss like just below that. That's something that I'm comfortable with doing according to whatever the price action is doing. This really wouldn't make much of a difference, so that's why I'll just leave it there. But yeah, you could take partials here, or you just let everything run. In this case, I would just kind of let it run. It's Asian session. There's not much volume in this session anyways.
Makes sense.
Any other questions or clarifications needed or anything? And if you guys want to take an entry, definitely let me know. Hey guys, how's it going? So we have a couple of minutes left until an hourly candle closes here. So I want to see if that hourly is still going to maintain the bullish momentum. If so, then we can manage our trade.
How long have we technically been in this trade?
Honestly, I wasn't even looking at the time, so I'm not sure.
Okay, no.
I'm just watching the candles fluctuate.
A few hours.
Huh.
Oh, I'm considering an entry if the new 4 makes a tiny bottom wick and respects that low.
The next one?
Yeah, in about 2 minutes.
Okay. It's gonna be another hour right here.
Oh,
I can skip if you want me to.
why not?
Alright. Oh shit. Taken out. Alright. Did you still want to take an entry here, or do you want to hold off and see if price is going to close above?
Close above.
Okay.
Then that would mean better opportunities.
So that one was taken about 4 hours into Asian, and then it closed 4 hours after that. So the slow volume, but we got like our 44 pips on that quick scalp. So let's see if we're going to end up closing above it or coming right back down. So we see some bearish volume here. But so far we see how like within the overall structure, there's still another structure forming, right? Where price was pushing bullish, and then we saw it holding onto the support, gave us a corrective move, and now it's pushing right above, held onto a support, made a new high, created another support, and created a new high right now.
Would you have felt comfortable taking an entry in the previous candle, considering we are in such a bullish movement?
On this
or
candle?
would that level... no. What? Is this a 4? Oh, okay.
I took an entry on this candle, so are you talking about this candle?
The one after. The one after the one that you entered. Yes.
This one?
Exactly.
Yeah. If price broke the high here, but again, you need to look at the limitations of your trade and also the range. If I want to keep the same TP, it would be like 19-20 pips. If this is a quick scalp, then yeah, sure. Which is pretty much what I was trying to go for with this entry here as well. Like a 46 pip scalp.
Mm-hmm.
So now here, if you want to look for those continued buys, the very first thing that I would want to see as price is kind of struggling into this area is create another higher low, and then as it breaks above, then look for another entry.
Mm-hmm.
Or, so that's one, or the second thing is break above, and then give us a break and retest here, and then continue pushing up. So that way you would break all these daily candle highs right here.
Makes sense.
So it's pushing down. As long as it holds on to like the basics of, you know, higher of a bullish structure or a bearish structure, which is higher highs and higher lows, lower highs and lower lows, that's all I'm really looking at. So as long as it holds on to this support, I would consider this the support where this candle started forming. So as long as it kind of holds on to these and doesn't really break below them, for me that would still be a bullish structure.
And since this entire level above... Oh man, I guess I can't draw with my finger either. Sorry. So that supply level, since we're in the 4-hour, would you ever consider like a legit supply sell-off trade from that level?
You could, but again, you need to know the limitations of your trade, right? So for example, you could take a sell right at this point, But you also have to realize that the last couple of times price has been holding on to a support, right? It's been showing us some good bullish volume here, and then holding on to higher lows here. Right? So if I want to take a sell here, the limitation of my trade would probably be either this area here that's tapping into right now, or maybe even come a little bit deeper here. But there's a high chance that it might not even go below that if it is to continue pushing up bullish. So you could take a retracement trade. There's no problem in that. And then your stop loss would probably be like be a couple of pips above this top wick of this candle. So like maybe here somewhere, or in the zone. So that's possible. Or you wait for these clear support areas here to be broken. So then now you have the confirmation of a sell-off, a bearish trend now, right? And then look for some sort of a retracement to confirm that bearish trend and then continue pushing down. So then you can catch this entire move coming right back down into these support areas.
Yeah, I typically wait for those confirmations, but lately I've been trying to understand, I guess, those supply and demand levels, especially like on the higher time frames, because they confuse me just a tad. Do you ever just enter a trade based on those levels and, of course, price action? Or do you mostly just kind of wait for that break and retest, more confirmations?
Break and retest is more ideal, but again, it depends on the market situation, where if it's like a market open, like right now, the New York Stock Exchange opened like 30 minutes ago. So that's where we're seeing a lot of volume, right? So somewhere around there, I would be more than happy to take like an impulse trade, right? I'm perfectly fine with something like that. But if it's dead in the center of a session, where I know that there's not going to be a lot of volume, then I want to see some form of break and retest. That's the ideal entry. I don't trade simply based off of supply and demand though. I need to understand how the candles are moving, because the candles will tell you exactly what you need to know. You know how we're doing like the marking off these levels and doing the analysis from like the weekly, daily to 4-hour? And we were talking about, well, there were clear signs of exhaustion coming up, like on the daily time frame, for example, right? These two doji candles, and we saw the volume starting to die down like this entire move up. We saw like 1 or 2 candles with some good volume, but after that, consolidation and everything. So that's legit. The candles telling you, where they're headed next. Which in this case, they were legit telling you is exhaustion.
Right.
So I don't trade, again, simply just based off of supply demand or like a support resistance. It's more of where the candle's telling me. And then you have the basics, the supply, demand, support, resistance, Wyckoff, whatever you want to use, EMA, SMAs, whatever you want to use. But all of that is like supplemental. I think the core of technical analysis, of any technical analysis, is the price action, which is like the actual candles.
Right.
So let's see if price holds on to these supports. Alright. If this candle can break the high, I would consider that a support, but I would wait for this candle to close prior to any entry. Alright, makes a bottom wick, it's pushing back up. I want to see, are we going to end up closing above this? If we are, I want to see again some sort of support being formed above this area so we can avoid a situation like this here again, where price broke above with a lot of bullish volume and then kind of consolidated and came right back down. And it's happened 3 times so far. So this would be Asian session, right? So this is like one of those situations where I want to see the confirmations prior to entry. So we push up. Let's see if price can hold on to this specific area up top here. So either give me a break and retest right here, so this candle closes bearish, and then the following one takes me up. As it breaks above the zone, I would take that entry. Or if it's just going to continue pushing up bullish, so there's three things. The first one, give me a break and retest here, push up, and I'll take an entry there. The second thing is it continues pushing, but I need to see some sort of wick rejection or some sort of support being formed here and then pushing up. Or the third thing is we try to break above it like these two candles did here, make top wick rejections, and then come right back down. Make sense?
Yes.
Yes.
And then you can check that on multiple time frames. So this weekly candle made that bottom wick. It's flipping up bullish. You go onto the daily. The last daily closed bullish. The current one made a bottom wick. It's breaking these highs here. So we just need to see that entry confirmation on the 4 hour. We have the bullish volume confirmation from the weekly and the daily already. Breaks the lows and the highs. So we saw this on the daily, but now we're seeing it here on the 4 hour as well. What is all of this pretty much telling us? Well, what are these three candles telling us specifically? Is there a lot of volume in those candles or not a lot?
No. Bodies are smaller.
Yes. And then what is this candle telling us that just broke the highs and the lows? Indecision, yes. So do we see exhaustion coming up potentially, or is this a lot of bullish volume and we're just going to continue pushing bullish?
Potentially exhaustion.
Yes. So now it's just a waiting game. So the candles have already telling you. So this is what I mean, right? When the candles are already telling you, you just wait for it. So this is New York Stock Exchange open right here. Hence the volume that we're seeing. Now this is kind of getting closer to the center of New York. So this is not the type of session that I would want to be taking impulse trades in. Your 4 hour into Asian. Now instead of just creating like more zones, we see how price is holding on to this resistance here.
Yeah.
So now if you need a buy, just wait for that to break. As soon as it breaks, that's your entry. This is pretty much how I figure out whether that day, when I come onto the charts in the morning, whether that day I'm going to get an entry or not. So if on the 4 hour time frame, if the candles aren't breaking the highs, if they're just coming back and retesting into like, let's say these lows that the candle is tapping into right now, if this is what I see, I know I'm not finding an entry that day. So I might as well just kind of go do whatever else that I need to do. If there's like massive wick rejections and stuff, that's completely fine. I still need the candle closes. So that's how I kind of figure out what's going to be a trade day or no trade day for me. And that's also one of the reasons why I don't spend more than an hour on the charts in the morning.
So like you observe the 4 hour, or you mean just in general?
The 4 hour, daily, weekly, and the 1 hour. So if this is happening on the 4 hour time frame, then if I drop down to the hourly time frame, it's not going to be anything different. It's just going to be a bunch of candles printing side by side. It's going to look something like this probably on the hourly time frame.
Mm-hmm.
But if I go up to the daily time frame, then I see that, okay, this is the daily candle right now. It's kind of just struggling. But as soon as it breaks above the zone, it's going to break the previous daily high. That means I can look for further buy opportunities.
Mm-hmm. So are we wanting to see it break its own high or like the highest points of the previous couple candles?
What I want to see is price. It's coming back and tapping into this area multiple times. It's very bearish right now with no top wick. So I want to see this candle closing and then the next candle creating some sort of support. Something like this. I'm going to wait for that candle to close, and then as soon as it breaks this high, whether it's that candle or the following candle, whatever, as soon as it breaks this zone right here, this high, that's where I would be looking for an entry. Ideally, I would want a candle close in this zone here, bullish, like holding onto a support, and then the following candle takes us up. That way I can have somewhat of a tighter stop loss, because if I just have one candle that's continuing up bullish, let's say like and the next candle makes a bottom wick rejection and then it starts, pushing up bullish like that, my stop loss would be somewhere down here. That's too wide. So I would ideally want like a candle closing here, let's say like bullish, showing me some good volume, and then the next one takes us up, whether it's like a bottom wick or just whatever it is. But I'd rather have a stop loss kind of in the zone, or maybe even tighter into the zone here, rather than all the way down here.
So you wouldn't take it if that first scenario with the bigger stop loss
No.
were to happen?
I need a stop loss somewhere here or somewhere here with the candle breaking this zone. So those, you could work backwards like that too. So there's like some people who are not comfortable with having a wide stop loss with like, let's say 20 pips or 25 pips. They only want to have like a 10 pip stop loss. So you could work backwards like that too. So if I need to have a 10 pip stop loss, let's say I'm waiting for my entry somewhere here. So where's my 10 pip stop loss? So let's say right here, right? So that's kind of the decision that you make. Am I going to have an entry here? Am I okay with having an entry as soon as these highs are broken and then maybe a stop loss right below the zone? Am I okay with having, let's say, 12 pips or something like that? So you could work backwards like that. So this is where my stop loss will need to be if I want to take an entry somewhere here. So what do these candles need to look like? So that means either I get, let's see, I'm going to draw it out here real quick. So either I get like, let's say, some sort of a bullish candle close here, and then I see some volume, something like this potentially, right? Some sort of volume here, and then the next one is kind of what takes me up. And then maybe I drop down to the hourly time frame or the 30-minute time frame. If it's like a market open, then 30-minute time frame, somewhere around there. And then I look for a break and retest on the 30-minute time frame as well. Potentially I get it somewhere here. So that way I can take an entry right at this level and then place my stop loss right below the 30-minute break and retest while the full hour looks like this. Is that making sense?
Yeah, that makes sense. Cool.
Yes.
Perfect. Yeah, so see how this one's pushing up? I wouldn't take an entry on this candle. Alright, let's see if we just end up in consolidation today. Alright, so that could be an entry point right there, right, as price is kind of pulling back as it's breaking these highs. So that's how you could work backwards, where it's, if I want to take an entry somewhere here, then am I okay with having like an 18 pip stop loss, or where price is right now, and then placing your stop loss right below this, 16 pips, 10 pips, what does that need to look like? Those kind of things. Does that make sense, how to work backwards from your stop loss?
To me it does.
Does anyone have questions about that?
No.
Alright, so when we go on the daily, we're also breaking the previous daily high. Go on to the weekly, we're pushing up with a lot of bullish volume. So I would go in with another 1%, let's say here. Usually I would go with like 2%, but just in case somebody else wants to take an entry, I'll leave that 1% open. And then I'll place my stop loss right a couple of pips below the current 4-hour, right below this little support that was formed here. So we really shouldn't be breaking below that once we have already created a support here. Let's say right here should be fine. Another like 40 pips, I think that should be fine. Does anyone else want to take an entry here? All right.
At this point, can we more confidently say that we're continuing our bullish trend since we've had a break and retest above that level at the high?
Yeah, I can't see to the left on here, but you would look to the left and try to see like where's the next level. If it's clean moves, then there should be no problem, but since we can't look to the left on this one here, then you would kind of figure out like, okay, where does it make sense for price to continue pushing. I'm just trying to do like 40 pips at a time to kind of show an example of how you can take like scalps even off of like some of these higher time frames instead of just using those lower time frames, and how the same things apply on the lower time frames as well. So I'm just going for like 40 pips or so, but potentially, let's say like we didn't know, but there was like a level somewhere up top here exactly where like I've set the TP where it was something like this. Right, so price could either just blow past it, or it comes like very close to it and then dumps right back down or something. But you would have to use whatever's happening to the left as confirmation. Right. And also like wherever the candles are telling you. So if we continue to see a lot of bullish volume in these candles, then the chances are that we're going to continue pushing. But if we see signs of exhaustion, like some of these candles were showing us, then maybe we'd have to like kind of figure out like, okay, what's the level of confidence that we have in that trade. For me, if it's like I'll close out 50% here, instead of like price coming back and hitting my stop loss, you know how like some people would close out 50%. If I have to do that, I'd rather just close out the entire trade. So if price is pushing up and I see something like this and I'm like, I'm not 100% confident in this trade, but let's just see what's going to happen. At that point, if I'm not 100% confident, I'm just going to close out the entire trade instead of playing the 50-50 game.
Makes sense. We're still in New York, right?
Yes, this is 30 minutes into New York Stock Exchange.
Cool. So in the live markets, would you say you equally take entries in the 30-minute, just like in the 4-hour? Or like what determines what time frame you use for your entries?
Around like New York Open, I'd be okay with 30-minute time frame, 15-minute time frame. But once I'm an hour into like whatever market it is, after it has opened, I usually jump up just to 30-minute, hourly, 4-hour, daily, those time frames.
But you take entries in the 4-hour.
Yes.
As well.
Yes. Alright, let's push up. So I saw price pushing up here, comes back down, closes below this. If this candle fails to break the previous high, then I would just close out my trade. Alright, fails to break the previous high, I would just close out my trade here. Or another way, again, to kind of manage is you could close part and then move to break even or just below break even. Different ways to kind of manage your trade. So let's say I close 50% here and then stop loss, you could I would move it just below the entry. So like, let's say right at this level here. So if price can continue pushing bullish, it's not that far away from TP, but this candle here failed to break the previous high, which gives me the sentiment that there is going to be some sort of potential exhaustion maybe to come back and reject into these areas, given that off the daily we have already started this bullish move up. So there could be a potential exhaustion coming up. So I would just close out, let's say 50% of my trade here, and then move my stop loss just underneath this bottom wick rejection. So I'll still give it enough room to fluctuate if it wants to, but as soon as it breaks below the zone, then I'm out. So you could give it, you can manage your risk that way too. That's one way of doing it. Or you just close out the entire trade. So I'm just trying to show you guys, what are the different ways that you can manage your risk. And you can kind of tweak this around according to your different trades that you take. So if you're looking for a 4-hour trade, 30-minute, 15-minute, hourly, these are just different ways to manage. Any questions?
Wouldn't that break of the high still be valid, given that this new 4-hour candle respected the previous candle low and broke those highs you're talking about?
For an entry?
No, for a continued, for you to continue holding your trade without really managing your risk.
For me, just because it broke the low and it's pushing up, see how it's not really breaking its own high? That's also another reason why I wouldn't be confident. And also the fact that this candle, yeah, we had some nice bullish volume in it, but we didn't break the previous high that price had already made.
But this new 4-hour broke the high and respected that previous candle low.
Yeah, but it's
That
not
was the
showing us
question,
the
really.
bullish volume to continue pushing like this is the bullish volume that I'm talking about. So this one made the low and then it just started pushing up bullish. We're not seeing that here.
Okay.
Make sense?
Yeah, that makes sense.
Okay. So what you can do, another way is, again, now you could kind of trail your stop loss. So let's say I did that, where I trail my stop loss, let's say right above the entry. So let's say I do like below the candle body low or something. It's already made the bottom wick. Either it continues pushing bullish, or maybe this is where we exhaust out and price needs to retrace. So I'm 10 pips in profit now. Another way that you could kind of manage. Or you can move to break even, right, and give price enough room to tap into that zone.
Is below that current candle's low a bit too tight?
Yes, it can be if price wants to come back for a deeper retracement.
Would there be moments in which you would be okay with that and then prefer to look for a re-entry or something along those lines?
Yeah, in the current situation is where I'm okay with it. Again, where we made, or actually let me back up a little bit. We came back and created a support right into the previous resistance areas, right? And then we saw bullish volume. This candle here broke the high. We saw some good volume here. Barely made a bottom wick rejection, which tells me that there was a ton of bullish volume. And then the following candle, same thing, barely a bottom wick rejection, but it fails to break the previous high. The third candle here makes a bottom wick rejection and breaks the high, continues pushing, and then the current one starts forming, and it's kind of just ranging in this own little range. So in this case, again, sign of exhaustion, and then potentially just some more bullish volume, but a potential sign of exhaustion.
Makes sense.
Alright, there you go. So close out the doji. and then the following candle pushes down and hits our trail stop loss. So we had 2 entries, both of them like quick scalps. We had 44 pips, closed partials at 31 pips, and then we had a trail stop loss at 10 pips into profit. So we just risked about 2% total and got like a 2.55% equity increase. Any questions on anything that we just went over today? No?
Not for me, thank you.
No.
Alright, cool. So have a great rest of the weekend, everyone, and we will see you guys next week for the weekly outlook for the group. We will have a webinar tomorrow, so I'll see you guys for that in the morning.